You'll usually hear that you shouldn't try to time the market and you should just invest and hold for the long term. I would normally agree and give that same advice, except when stock prices are very high. So how do the stock prices look right now? Well, according to a few different metrics, they look very high. The Shiller PE ratio measures the price of stocks divided by their most recent 10 years average earnings. It's currently at 35, which is higher than it was in 1929 at the peak before an 89% stock market crash. The Buffett indicator is at about 184%. When stocks are fairly valued, it's usually at around 100%. Inflation is at about 7% over this last year. When inflation gets above 3%, the Federal Reserve usually steps in to increase interest rates. When interest rates increase, asset prices usually get pulled down. Here's another way to look at it. If you invested in stocks in 2000 at the peak of the dot-com bubble, you would have been better off waiting 10 years to invest. These are strong signals that point to stock prices decreasing. Right now we're in February 2022. I don't know exactly when, but if I were to guess, by mid-2023, we should see at least a 40% decline in stock prices from the previous peak. If it doesn't happen by then, I'll just keep waiting. It'll happen eventually, and it can be a big opportunity.